Welcome back to Investing Talk podcast. Today, we're tackling a question many of you have actually asked. Is Novartis a good time to buy now? We're going to break down all the latest information on Novartis, from its financial health right through to its groundbreaking R&D. The idea is you walk away truly well-informed about this pharmaceutical giant. Before we really jump into the substance of this analysis, if you're finding these breakdowns helpful, please do remember to subscribe, like, and maybe leave us a comment. Your support, it genuinely helps us keep going. And if you're able, consider buying us a coffee. Every little bit helps, honestly. And speaking of comments, if there's a specific company you'd like us to look into next time, just let us know below. All right, let's unpack this then. When we talk about Novartis, we're not just discussing any old pharmaceutical company, are we? We're looking at a truly global player, a powerhouse focused on innovative medicines. What's the sort of core mission that defines Novartis?
Yeah, that's a great place to start because understanding their mission really helps frame everything else, doesn't it? Novartis is, well, fundamentally focused on reimagining medicine itself. Their goal is to improve and extend people's lives. Their aim is incredibly ambitious, really, to empower patients, healthcare professionals, and societies as a whole when they face serious disease. It's a mission that translates into just remarkable scale. Their medicines reportedly reach nearly 300 million people worldwide. Just think about that for a sec. The sheer breadth of their global impact.
300 million. That's a staggering reach.
So given that immense scale, where are they concentrating their therapeutic efforts? And what kind of innovation are they prioritizing beyond, say, traditional drug development? Right. They've strategically honed in on 4 core therapeutic areas where they think they can make the biggest difference. That's cardiovascular, renal metabolic health, immunology, neuroscience, and oncology. And what's particularly compelling, I think, is that they're not just sticking to established approaches like, traditional chemistry and biotherapeutics. They're also making pretty significant investments in emerging technology platforms. We're talking about really cutting-edge areas like gene and cell therapy, radioligand therapy, which uses targeted radiation to fight cancer, and xRNA, which is a really promising new frontier in genetic medicine. It really shows a commitment to, well, future-proofing their pipeline.
Okay, so a company with both broad impact and a very forward-looking R&D strategy, kind of pushing into the next generation of medicine. On the geographic front, which markets are central to their growth plans? Are they looking everywhere, or are there specific regions they're really focusing on?
They have a very clear, quite deliberate focus on growing in key priority geographies. The U.S., naturally, that's a cornerstone market given its size and, the regulatory environment. But they're also really emphasizing growth in China, Germany, and Japan. This focus suggests a strategy to sort of deepen their presence in high-growth, high-value, and strategically important markets, rather than maybe spreading themselves too thin globally.
Right, makes sense. Now let's shift gears to where the rubber really meets the road for any investor, the financials. The latest earnings report, that was from July 17, 2025, it covers Q2 2025 and shows some genuinely strong numbers. What really stands out to you from those financials, especially when you think about the current pharmaceutical landscape?
What was truly fascinating here and actually quite impressive for a company this size is that Novartis reported strong Q2 results that actually beat market expectations. Net sales in Q2 grew by a robust 11% in constant currencies, hitting $14.1 billion. And for the first half of 2025, that growth trajectory just continued, with sales up 13% in constant currencies to $27.3 billion. This isn't just good. It outpaces many of their big pharma peers. It suggests they're very effectively navigating what's often a challenging pricing environment.
Wow, 11 and 13%. That's not just growth, that's accelerated growth. What about their profitability? How did that hold up with that kind of top-line increase?
Even more impressively, their core operating income expanded significantly. It was up 21% in constant currencies for Q2 alone, and a remarkable 24% for the first half of the year. This strong performance actually allowed them to raise their full-year 2025 guidance for core operating income. They bumped it up to low teens growth, which is a meaningful step up from their previous low double-digit expectation. Sales are still projected for high single-digit growth, but yeah, the profitability is clearly outpacing. Their Q2 core operating income margin reached a really robust 42.2%.
42.2%?
Yeah, which is quite strong, especially considering the investments they're making in R&D and these new technologies. It speaks to solid operational efficiency.
A 42.2% operating income margin is certainly compelling. But, a company can look good on paper, yet struggle with liquidity. How are their cash flow trends looking? Is the cash coming in?
Yeah, good question. And the cash flow trends remain solid, reinforcing that financial strength. Their free cash flow for Q2 was $6.3 billion. That's a substantial 37% increase over the prior year.
37% increase. Okay.
Yeah. This is a critical metric for investors, right? It indicates the company's ability to generate cash after covering operational expenses and capital expenditures. This strong cash position is also reflected in their recent announcement to initiate up to a $10 billion share buyback program. That's slated to be completed by year-end 2027. It signals confidence in their long-term cash generation and a commitment to returning value to shareholders.
Okay, so the overall financial health looks undoubtedly strong. Now let's talk about the engines driving this growth. Which specific products are really performing well, and importantly, are there any that are slowing down? Because that mix tells us a lot about their current market position.
Right, exactly. The sales growth is really being driven by continued strong performance from a core group of key brands. In Q2, Kisqali, their breast cancer therapy, saw an impressive 64% growth in constant currencies.
64%. Wow.
Yeah. Entresto, a leading heart failure medication, was up 22%. Kesimpta, for multiple sclerosis, rose 33%. Scemblix, another oncology drug, surged by a remarkable 79%. I know. Leqvio, their cholesterol-lowering injection, increased 61%, and Pluvicto, that radioligand therapy for prostate cancer, grew 30%. These are genuinely blockbuster-level growth rates in high-value areas, showing the success of their innovation strategy paying off.
Okay, those are some huge numbers.
They are. However, it's equally important to note that some products did experience sales declines. It's not all up. Zolgensma, their gene therapy for spinal muscular atrophy, along with Promacta-Revalade, Tecenia, Lucentis, and the Galvus Group, well, they saw their sales dip. This is pretty typical for a mature pharma company, you know? Older drugs face competition or patent expiration. It just underscores the constant need for new pipeline successes to offset these declines.
Which brings us perfectly to the future then. While the current financial health is strong, a pharmaceutical company's long-term viability and growth potential are often defined by its R&D pipeline. What are some of the most exciting recent developments in their research and development, particularly from that Q2 period you mentioned?
This really raises that important question about their sustainable long-term growth, doesn't it? From Q2 alone, we've seen several significant innovation milestones, really showcasing the breadth of their R&D efforts. For EU approvals, Vanrafia received FDA accelerated approval. That's for reducing proteinuria in IgA nephropathy. It's a chronic autoimmune kidney disease where protein leaks into the urine.
Right, can lead to kidney failure.
Exactly. This approval offers a much-needed new therapeutic option for those patients. Also, Cordon Baby, the first malaria treatment specifically for newborns, was approved in Switzerland. Rapid approvals are expected across 8 African countries too, which is, a major public health milestone.
Those are clearly significant approvals addressing really unmet needs. What about their clinical trial readouts? Any promising results there that hint at potential future blockbusters?
Well, absolutely. In terms of trial readouts, both ianalumab phase 3 clinical trials met their primary endpoints. One was for Sjogren's disease, the other for primary immune thrombocytopenia. These are autoimmune disorders, and this progress indicates potential new treatments for conditions with pretty limited options right now. And Pluvicto, which we just saw growing strongly in sales, also had a positive phase 3 readout in PSMA-positive metastatic hormone-sensitive prostate cancer.
Okay.
Yeah, this is a critical development. It showed a statistically significant and clinically meaningful benefit in radiographic progression-free survival, with a positive trends in overall survival, too, for a very aggressive cancer.
That's huge.
It is. And there's more. Fabhalta, another exciting drug, showed clinically meaningful improvements in hemoglobin levels in adult PNH patients. That's a rare, life-threatening blood disorder. The vast majority reached normal or near normal levels. Scemblix, the oncology drug, demonstrated a 55% lower risk of discontinuation due to side effects compared to another treatment in newly diagnosed chronic myeloid leukemia. That's a huge quality of life improvement for patients.
Yeah, absolutely.
Looking further ahead, Votoplam for Huntington's disease met its primary endpoint of reducing Huntingtin protein levels and showed a favorable safety profile that could be a potential breakthrough for a really devastating neurodegenerative disease. And remibrutinib, a potential first-in-class oral BTK inhibitor, BTK is Bruton's tyrosine kinase. Inhibiting it can block certain inflammatory pathways. Well, it had a positive phase 2 study in food allergy. Supports its potential as a novel approach there.
That's an impressive list of advancements, really running the gamut from rare diseases to common allergies and major cancers. But R&D isn't always a straight path, is it? Were there any setbacks or trials that maybe didn't meet expectations?
Yeah, you're right. While the general trend is overwhelmingly positive, and that's really critical to note, R&D by its very nature isn't without challenges. It's worth acknowledging that, yeah, not every trial meets its primary endpoint. For example, the Cosentix Phase 3 study in giant cell arteritis, that's an inflammatory condition affecting large blood vessels, well, it didn't achieve its primary endpoint. Also, Novartis decided not to advance ianalumab for hidradenitis suppurativa, though other ianalumab studies are continuing as planned. These are just part of the normal R&D cycle. Success is never guaranteed, but it's important to be transparent about them.
Okay, that makes sense. Beyond their internal labs, what about strategic acquisitions? Are they buying innovation to bolster that pipeline?
Yes, they are actively looking outside as well. They recently completed the acquisition of Regulus Therapeutics. That's a clinical stage biopharmaceutical company, and it brings in a potential first-in-class asset for autosomal dominant polycystic kidney disease, which is a genetic kidney disorder with significant unmet need.
Another kidney focus.
Yeah. And they also secured an exclusive option to acquire Cyrenax's brain delivery module platform. This could be transformative. This technology has the potential to significantly enhance brain delivery for various therapeutics, which could unlock treatments for a whole host of neurological conditions where drug delivery has always been a major barrier.
Ah, interesting.
It really shows a commitment to not just developing drugs, but also the technologies that enable future drugs.
Okay, so we've thoroughly examined the financials, the robust product performance, and the exciting, albeit sometimes challenging, R&D pipeline. Now, to sort of connect this all for our listener, what does this accumulation of data really mean for Novartis's long-term health, its competitive edge, and ultimately for you as a potential investor? What are the fundamental strengths, and what looming challenges should we be aware of?
All right, let's tie it together. If we connect this to the bigger picture for you as an investor, Novartis is fundamentally a stable, remarkably well-managed pharmaceutical giant. No question. Its core strengths are pretty undeniable. Strong, consistent cash flows, high profit margins, and a deeply entrenched competitive position worldwide. They are particularly dominant in cardiovascular, immunology, and oncology, all high-growth, high-value therapeutic areas. Their geographic footprint is also a strength. Roughly one-third of its revenue comes from U.S. sales. That indicates a very strong presence in the world's largest and most profitable pharma market. Okay. And as we just discussed, their late-stage pipeline, packed with promising new drugs and platform technologies, promises ongoing growth and significantly supports its defensive value, meaning it tends to hold up well even in, say, challenging market conditions.
There's always a but, isn't there?
Well, yes. It's crucial to acknowledge some significant challenges that come with these strengths. Like many large pharma companies, Novartis faces looming patent expiries for several key drugs. We're talking about major revenue generators like Entresto, Tecfidera, and Promacta. These are likely to impact revenues in the medium term. For example, a U.S. generic entry for Entresto is assumed for mid-2025 for forecasting purposes. That will undoubtedly put pressure on those sales numbers.
Right, the patent cliff is always a factor.
Always. Additionally, while their debt levels are moderate, their current ratio, it's about 0.82, is slightly below optimal for comfortably covering short-term liabilities. It's not a huge red flag, but it's something to keep an eye on. And of course, they operate within a sector that is constantly battling pricing pressures from governments, from insurers, navigating complex regulatory risks, and facing intense competition from both established players and nimble biotechs. These are just inherent risks of the industry.
That's a very balanced view of the fundamentals. So for you, our listener, who wants to know if now is the right time to consider buying Novartis stock, what do the valuation metrics and the technical signals tell us about its current market positioning? Is it cheap? Expensive?
Okay, valuation perspective. Let's look at the numbers. Novartis is trailing 12-month PE ratio, the TTM PE. It stands at 18.13. His forward PE is 13.56. These figures are generally in line with, or in some cases maybe slightly below, the averages for large pharmaceutical companies. Its price-sales ratio is 4.29, which is also pretty typical for major drug producers. It indicates it's not wildly overvalued relative to its revenue, at least.
So kind of middle of the road for its sector.
Pretty much. And the consensus from both analysts is that Novartis is currently, well, fully valued. This suggests that while it's a solid company, there might be limited immediate upside potential at current prices. The average price target from analysts is around $123.50, which is very close to its current market price range of, let's say, $122.56 to $124.31.
Right on the money, basically.
Yeah. While one firm, BNP Paribas, did issue a strong buy rating, the majority of analysts currently recommend holding the stock. That suggests the market has already factored in much of the good news we've discussed.
Okay, so it's trading around its fair value, according to most analysts. What about the technical side? What do the charts and indicators tell us about its recent price action and momentum? Is it trending up or down?
Looking at the technical side, the stock is currently trading near a resistance level of about $124. It's proven difficult to break through that recently. Support appears around $118, with stronger support down at $110. That suggests potential downside if it can't hold those levels. The 14-day Relative Strength Index, or RSI, is at 38.93. That indicates some mild downward pressure. But importantly, it's not a strong oversold signal that would typically precede a sharp bounce.
So no screaming buy signal from the RSI.
Not really.
Hmm.
The stock also exhibits low volatility, with a beta of around 0.55 to 0.62. This means it's less sensitive to broader market movements, which can be attractive for investors seeking stability.
Yeah, lower beta is often good for defensive plays.
Exactly. And finally, the broader market fear and greed index is currently at 39, signaling fear. This suggests that traders, generally speaking, might be exercising caution across the market, which can certainly influence individual stock performance, even stable ones.
Okay, so we walked through Novartis's core business, its impressive financials, its innovative pipeline, the inherent strengths, and the undeniable challenges, all viewed through the lens of its current valuation and technical signals. If you're considering an investment in Novartis, how should you ultimately view it? What's the bottom line here?
Overall, I'd probably rate Novartis around a 6 out of 10 as an investment right now.
Okay, a 6.
Yeah. It is, without doubt, a stable, exceedingly well-managed pharmaceutical giant. It's underpinned by strong cash flows, high margins, and a very promising pipeline. That's the good news. The current valuation, however, reflects what analysts consider, full pricing. That means significant short-term upside is likely limited unless some major new catalysts emerge, maybe from their R&D or strategic initiatives. While those patent expirations and sector-wide risks are definitely present, they appear to be manageable, given the company's robust strategy and ongoing innovation.
So more suited for certain types of investors, perhaps.
I'd say this makes Novartis particularly well-suited for a long-term investment horizon. Its defensive characteristics, the strength of its pipeline, and the stability of its dividend, which currently yields around 2.09%, position it more as a kind of portfolio anchor than maybe a speculative growth play. For short-term traders, there's moderate risk with somewhat limited price upside expected, especially considering those current resistance levels and the general analyst guidance leaning towards hold.
It's a very clear summary for our listener. Thank you. This really brings us to a final thought, doesn't it? In a world where this groundbreaking medical innovation is constantly battling market pressures, regulatory hurdles, expiring patents, how do you, as an investor, truly balance that long-term promise of life-changing science with the immediate demands of portfolio growth and financial returns? It's a fundamental question of artists, and indeed the entire pharmaceutical industry grapples with every single day. We certainly hope this detailed breakdown helps you on your investing journey. Don't forget to subscribe, like, and comment. And hey, if you're feeling generous, buy us a coffee. Your feedback and support mean the world to us, truly. Join us next time for another in-depth look at the companies shaping our world.